Welcome back to Beyond the Cards, your favorite monthly podcast, where you're also your favorite payment nerds. We talk about the payment related news you want to hear most. Well, welcome back, guys.
Welcome back. It's been a long time.
It has. It has. So I did the Beyond the Cards live. I did our first live podcast show.
How was that? I know that was fun.
Yeah, it was actually pretty fun. Um, So we did it at Texpo 2025, which was in San Antonio, and it was pretty fun. I mean, I was alone. I would have appreciated having one of you guys with me. Maybe we'll work on figuring out some of those logistics a little bit more in the future, but it was definitely really interesting. I did record the session, so I have the audio sitting in my, like, I don't know, Google Cloud or something like that, and I just haven't moved it over. Um, but yeah, it was I think it was definitely really different for the crowd. I had a pretty decent size crowd in the room, and I kind of started off and was like, "Hey, okay, do you guys know this is a live podcast session, right?" And there were like kind of bewildered faces, and I was like, "All right, well, just so that you know, you're all about to be recorded, and I'm gonna engage with you."
But I'm sure they like that because that type of engagement it does not you don't see that a lot in these conferences. So I'm sure that was a very new experience and good, and it's probably something that they need to start implementing into these conferences as well.
Yeah, like I know that they'll do like the round tables and quote unquote like panel discussions, but I think those are like so formalized.
Yeah, I was just at a conference yesterday and I could see that being something that would perk people's interest just to give them a little bit of, different viewpoint, different session than the typical, one panelist and their client. Um, so also I think it's great you had a pretty good attendance considering the fact that you were up against a couple other sessions. So,
Yeah, and let's be real. I was a payments discussion at a treasury
yeah.
focused conference. So I already had the kind of my hands tied behind my back.
Mhm.
But I actually we had multiple people come up after and say that it was some of the most fun that they've ever had at a session in a conference ever, and that it was actually one of the best sessions at the entire conference because of, I think, just of how we approached the situation of like, hey, let's just chat and let's, dive deep onto some of these topics and let's pick them apart together and let's, like, compare viewpoints and get what you think versus what we think and have a really good discussion that way. And I feel like the audience really enjoyed being engaged in that way. Um, and like, me, I like immediately broke the ice within like about 10 seconds. Um, so I also think people felt really comfortable of actually talking and asking questions, because that's always the other thing at like a conference of, it's great to give a session to, you know, a packed house of 200 seats, standing room only, but also you're not going to have your question asked or you're going to be intimidated.
Right. Very
Like,
true.
I don't want to I don't want to get up to the microphone and ask the
And
question.
say this on a live recording because someone might laugh at me.
Meanwhile, I just ran up to the person, shoved my recording device in their face, and was like, "What was your question again?"
Well, it's nice to know too you had questions because it's always should I be prepared with a pocket list of questions in case everyone just sits there?
Oh, you mean the planted question?
Correct.
Yes, those questions.
Yeah, like that is definitely some like behind the scenes tea where it's like if you ever go to a conference or something and a question gets flashed on the screen or something like that, and you're like, I don't know if anyone actually asked that question. they probably planted it so that way they can have questions to answer. Otherwise, like your session ends 10 minutes early and no one asks any questions, and you're like, okay, I guess like bye.
And as a previous presenter, they do make you come up with your questions just in case. They definitely do.
They really do. They're like, would you like to have a few questions prepared in case no one asks any?
And of course, you as the presenter choose the most easiest questions.
Yeah, you're like, I need my safety net ones.
Exactly.
Yeah.
Someone always asks some ridiculously hard question, too.
Either ridiculously hard or like highly controversial.
Correct.
Because you're at a conference too, and so like you don't know who's in your audience, and the party that that question is about may be in your audience, and then they will come up to you afterwards and be like, "Hey, I don't know if I agreed with what you said up there," and you're like, "Oh."
Or they'll actually do it while you're up there and just go back and forth with you about it.
Yeah.
I've seen it happen as well. I'm like, oh, what can y'all?
I don't know if that's actually true, actually. Let me tell you how it really is. And then you're like, get me off the stage.
Yes. Or you ask one of those questions where it's like, oh, well, that question is, a little complex. So how about we take this offline? Because it's going to be a long, drawn out answer.
Yeah, for sure. So I think our plans for live sessions is that we will do some clips from the recording, maybe just some of the more fun, highlighty bits. But I think we're gonna keep it exclusive. You know, must be present to win.
Hey, that's the best experience.
That's what I'm saying. That and also like these conferences do not understand like what the needs are to be like, hey, we actually need to set up a bunch of AV equipment to make sure that we have good audio capture, that we have, potentially footage. We need to make sure the crowd can be mic'd or that we can like get audio from the crowd. I think this is like a very new concept for conferences that are like, why don't you just like instead make it a panel discussion? It's like, well, that's not what we want to do. So, that being said, if you see Beyond the Cards Live offered at your next local treasury or payments related conference, show up to that because you're gonna get the exclusives. And I mean, I feel like we did talk about some controversial subjects.
So the next one will be in the fall, yeah?
I mean, I'm not sure. I mean, we do
done with
conference season.
Yeah.
Well, everything that's slated for the fall has already been picked, and I know I was not
true.
for any future sessions, so you shan't be seeing me on the
Docket.
conference circuit. I don't know, but maybe like we could do like some sort of Zoom or event or something like that. That could be fun.
Yeah, that could be fun.
Yeah, that way also we can get like Europe involved.
Yes. We have to include that Europe.
Even though you have the Pope, but we still exist. I'm joking, of course. But yeah, happy to contribute.
That's some breaking news there. That's like just happened.
Yeah.
All right, well should we jump into some stories?
Yes. Let's get our first one on. Let's see. Stripe applies for US Bank.
Yeah, so Stripe has registered in the state of Georgia to become a merchant acquirer limited purpose bank. So that was really interesting. And I think like maybe a lot of people don't know like what the actual setup is with acquirers unless you've really looked at your contract and kind of been like, I don't understand why this person is referenced in the contract. But every acquirer has what's like referred to as a sponsor bank, and that sponsor bank is obviously responsible for the risk that the acquirer underwrites, and ultimately they're responsible for all of the funding, etc. So I know that there's like, especially in the US too, there's like specialty banks that only do these types of operations. So, like, I don't know if you're ever listening to a commercial and they'll be like sponsored by MetaBank or like sponsored by the Bancorp Bank. You'll usually hear them at the end of like specific financial instrument products. Um, and you'd be like, I've never heard of MetaBank, which is not related to Meta Facebook. But these are usually these specialty, commercial banks that are only doing these types of operations. So Stripe, in getting this, will essentially not require a sponsor bank in all situations. I think they've gone through tremendous lengths to say that they are not abandoning any of their sponsor bank relationships that they have right now, which makes sense, right? Every good acquirer has multiple sponsor banks behind them because different sponsor banks have different risk appetites. But I mean, at least it does allow them, or it is reported that this should allow them to have better commercials on their back end, which they can then move downstream to specific merchants or specific subsets of merchants. But the article also like goes and makes like explicit point that like having this type of banking license does not mean that they are going to be acting as like an actual bank. Like you can't. There's not going to be a Stripe bank branch on the corner.
Yeah, and I also think they're kind of following the lines of what Fiserv is doing, right? Because of course Fiserv got their license in Georgia, if I read that correctly. And they're not being a bank, they're not opening branches or taking any deposits. So it's kind of like they're kind of on the wave of being as big as Fiserv in a sense.
Well, and I mean, they definitely have these types of relationships elsewhere. Like it says, I think that they have 9 different memberships. And I mean, ultimately, is this something that like many people will even notice? Probably not. And interestingly, it does like the number of acquirers that have these types of licenses is actually like fairly limited.
I guess one of the benefits they can, at least Stripe can get out of this operation is that they can probably reduce their cost, right? They've reached this level where they can afford having these I would say skills internally, so they can manage the risk and so on, and then apply for this sort of license. So I guess now they can probably try to reduce their cost, and eventually, I don't know what you think, guys, but maybe they can more easily target enterprise merchants, which I guess is still a challenge for those relatively new players there. It's been a while since they were actually new, but like Stripe or Adyen in Europe also trying to penetrate the US market. I guess the very well established players like Pfizer, who is, as you were saying, just following this path, they have much more competitive rates, even though they are, you may say that they're legacy or whatever, but when you want to target enterprise level of accounts, you really need to be competitive at cost. You can no longer propose a bundle rate at 2 or 3%.
Well, and
I don't know.
I think in general, right, like the technological competitive advantages are getting slimmer, I would say. Right, like you can only hold a competitive advantage on, say, like your overall platform's tech for so long before people start to copy or people start to catch up. And I think if you're looking at it from like a nouveau riche versus old money perspective, this is kind of almost like a step of like saying like we're no longer the new kids on the block, right? Like we are an established, well-ran company and we're taking this step to also signal to the market that like we're a serious company, right? Like we're not just the, sign up every e-commerce account. We're actually like a core part of this industry. And it seems like to me that that's almost like the bigger message that they're sending with this, is that it makes them more credible as like an established player. Do you guys think that that might be part of this angle as well, besides just, obviously the commercial benefits?
Yeah, absolutely. I think even calling themselves bank, even though, as you were saying, they wouldn't be becoming a commercial bank that you can find on the streets. But yeah, there's definitely a reputational aspect out of it. And I don't know, I was also thinking maybe now that they have a more direct relationship with the networks, I don't know if they can have. I mean, they were already one of the biggest partners of the networks, but they can maybe have better deals, better access to new products, new features. I don't know if that's changing anything, but at least better rates, better deals with them, since they no longer have to go through any intermediary. I would say so. And I would be
Yeah,
curious to
that's
see,
true.
if they follow the same strategy elsewhere, because I know, for example, they operate the same way in Europe. They go through the main
Mhm.
local banks as well.
Yeah, and it probably also just provide like the other thing that could be really interesting as well is, I mean, I know from experience of coming from an acquirer that had a sponsor bank who was had a consent order. It's like public information, but obviously you can have your hands slapped. Much easier though in operating in this space, right? Like there are regulations that cover these specific types of financial institutions and companies that act as these types of financial institutions. So again, it's kind of to me like this legitimizing because, they are also one of the first companies to really pursue stable coins, something that does have a, yellow flag above it in terms of risk, and it's almost kind of like balancing like the hey, we're out here on the forefront utilizing stablecoins for settlement and global settlement, but also like look, we're doing something very traditional and will be subject to higher scrutiny and regulation. So like it's almost like a balancing of their two core interests. Exciting news from them. I guess who will have firsthand seat to seeing if those commercials bear out? Probably us. All right, should we talk about one of my favorite topics in the entire world, payment method options? I love talking about it. So, payments.com put out a study basically looking at consumers and their preferred payment options, especially when you don't have your favorite payment option available to you. And again, I don't think it's any secret that there are talks, mumblings, rumors of, dare I say, recession in the US.
The R word.
Not the bad R word, but the other R word.
Bad R word.
Oh, we'll talk about that later.
Yeah, we'll save that for later.
But I think it is fair to say, and I mean it is very common in the news to say that at least like Americans, right? We are the largest consumptive market. Like this is part of our core strength as a country is that we have the customers that are buying all the stuff from around the world. But we are also getting extended, which means that credit options are becoming a larger and more central forefront into the payment method option. And looking through this study, the thing that I was just almost taken aback by was that customers preferred credit 76% of the time.
I mean, on this study, are we talking about primarily just retail?
It did seem that it was primarily retail focused.
Because I
to
think
say.
I'm sure we would all agree that's probably the one area where if it doesn't line up with probably exactly what you're planning on going in there and using to pay, you're like, well, I've got to save my checking account money for my insurance premium because that's more important. So I can see how the credit component keeps going up ever so slightly as people are just buying themselves that extra time. But
Well, they did diversify into essential purchases versus non-essential
yes,
purchases.
Essential 76 use credit cards, non-essential 73. That's a lot still.
And buy now, pay later was 10%.
I mean, even for essential purchases, I feel like 76% is high. I mean, that'd be like your groceries.
Yeah, like
I also think there's a component of this we've talked about many times is the driver and the interest and people's love now for rewards programs, which keeps pushing up also that credit card usage.
oh, definitely. So, personal anecdote, right? Like, I live very close to an airport that is basically just a Southwest airport. I fly within Texas probably most often than I fly to other parts of the country. And so Southwest is like super convenient for me. And of course, Southwest has made all these changes to where now, like, having their credit card in my wallet now seems like it's probably the best idea for me. Uh, and like all of those credit cards, they all are like, in order to get this big old prize we're dangling in front of you, you need to spend X amount of dollars within the first like 3 months of opening this card. And so, like, I feel like that also drives a lot of credit utilization as well, as people are trying to secure these incentives from credit card signups. I feel like they're switching things that would be non-essential to essential and switching those to credit cards. But the other thing that this made me think of is like, where in the world is pay by bank ever gonna fit into this market? Just seems like it's almost an insurmountable level of difference, you know?
Because it's going to be a small share. I mean, the statistics show that these people are using credit, whether it's buy now, pay later or an actual credit card.
Yeah, and I honestly think that percentage is going to change. Of course, the buy now, pay later option, that percentage is going to go increase as they're implementing new plans, new companies, new businesses. And it's going to be more common for consumers to use that option again to stretch out their time and how to pay for it over time. Just like with using a credit card. Oh, I'll use this instead of my debit card.
Yeah. I mean, I just don't see a world where it's competitive. You would have to provide such steep discounts, be like, okay, yeah, if you pay by bank, it's 7% discount, 5% discount, 10% discount off of your purchase price. And I feel like that creates just a huge complication of like margin discussion. But also, are you even allowed to tell customers that because you accept, I don't know, a certain payment method that has anti-steering provisions within it that say that you can't say that you prefer one payment method or another? And I think that like this study, to me, what this screams is this is why credit cards work in the US and why pay by bank and faster payment options and open banking exist in Europe and not in our market. So, I mean, like, since there's basically not real interchange, I mean, there is, but it's so inexpensive in Europe, right? Like, the margins aren't there for European banks to really offer a ton of credit card rewards, which is like the other thing that really kind of like shocks me is how much American Express there is in Europe and starting to grow in terms of credit card. And it's like, is that because like European consumers get rewards for having an Amex card?
Well, yeah, I can confirm that. That's actually, I think it's becoming one of my favorite topics, which is most of the time regulation doesn't really get to the initial purpose, or there are so many things that were not anticipated. So yeah, I think you made a very good point, because the fact that interchange is so small in Europe on traditional Visa, MasterCard, or local networks cards make that for sorry, cool. Makes that for most of the alternative payment methods, or even Amex, are becoming like mainstream. PayPal is crazy. The uses of PayPal in countries like Germany or Italy, and their buy now pay later option, 4 times buy now pay later, is being more and more used. And the reason is that there's no actual credit on traditional cards, and for sure no rewards. And so yeah, I think there is a real, I don't know if that would be a problem, but there is a real topic for the regulator if they want to keep the market healthy, and if they want to keep cards as they are. Otherwise, they would probably tend to disappear.
Yeah. And I mean, I would definitely, and I mean, keeping an eye on this like growth of Amex overseas, where they are the only rewards provider in a market. Like, sure, maybe they're not capturing as aggressive of a market share as they do in the US. And, they obviously have to compete with excessive rewards from, issuing banks here in the US. But like, could you imagine if like a major European airline was like, and we've partnered with Amex, so now you get 3 times the miles or whatever? That could be like a huge disruptor. And maybe that exists and I just don't know about it because I don't fly a lot in Europe. But I mean, that's how they get you here.
Yeah, and you were talking just right now about pay by bank, and I think the topic is actually on rewards, or the way you can reward somehow your customers if you want to encourage them to use a certain payment method because you have a certain interest. You may call it cost or whatever, or efficiency eventually, because you get settled more much faster than with cards. And in that case, is of course not because merchants are paying less expensive that consumers will switch to this payment method. So you need to propose something, and this something must be, you may call them incentives, you may call it rewards,
Loyalty program.
benefits, loyalty, but you definitely need to create a story around the payment method. It's not just because there is a rail that people will use it.
And I think loyalty programs are a great option, right? To like, how do you counteract issuers rewards versus, your in-store loyalty rewards?
Yeah.
But that also requires, a merchant to then manage a loyalty program, and they need to spin probably a whole division up that's dedicated to managing those loyalty programs. And so, like, there are options, obviously, for companies where you can outsource loyalty program management. But I feel like the competitive angle, right, is like, okay, but now I only have points at this single store. Whereas if I use my credit card, I get points that I can use multiple different places, or I'm getting cash back that, is as a credit against my bill. But very intriguing study, and probably gonna get a little bit worse because we could probably, and maybe we do like an entire dedicated session on this, because it's like I'm reading more and more, I would say, concerning articles about in my opinion, one of the best agencies in the US, which is the Consumer Financial Protection Bureau. It's not doing so hot these days. I think I just recently
That
read
jumped smoothly right to our next article, actually.
I think I just recently read that the department has gone from 1,500 employees to 200 employees. But yeah, so I mean, obviously, one of the things in the CFPB crosshairs for quite some time was buy now, pay later. And there's a lot going on in the CFPB base with buy now, pay later. So again, obviously, maybe we just like do a whole deep dive into this because the rabbit hole is deep. But really what we're looking at here is essentially the about face of the CFPB to instead trying to hold buy now, pay later, providers to essentially some level of what consumers would be used to with credit cards, like having some dispute rights, cancellation, refunds, Um, that was being pushed on them under a former administration and now under our current administration. The plan is to essentially like back away from the enforcement, which I don't think is great.
I don't think there's. I concur.
Did that anyway. They didn't go with that rule because, for one, it kind of made it like, hey, okay, if they made a return, you gave them their return back or your funds. They didn't do that, and I am a person that has used buy now pay later. So when I return an item, I still had to cover whatever that amount and fee was. I didn't get anything back. So the rules did not apply, even though they gave them time to adjust to the rule. But it's like, we still want to do whatever we want to do.
Yeah, I mean, it had not even ever gone into effect. It was just like, I think they had basically, and there seems to be like a particular lobbying group mentioned here, the Financial Technology Association, which is made up of a group of players within the buy now, pay later space.
To push it.
Yeah, they certainly did not want this enforcement, right? It's
going to make it similar to the credit card, regulation or credit card disclosures, regulations, basically providing more information to those consumers, because I think some people probably view this significantly different when if you don't pay your buy now, pay later back, that's when you can get in trouble. Also, I think another thing we've talked about in the past was I guess, tracking of this in terms of credit load for consumers and how that was also at that time also overlooked. There's nothing out there saying, okay, well, Chelsea has 52 buy now, pay later. Sure, they're all on a 3-month payback, but what happens if Chelsea doesn't pay them back?
And what happens if Chelsea's also overdrawn on all of her credit cards?
Right. What happens if there's actually no money in Chelsea's accounts?
Yeah, and should just and I mean that's definitely like and again, this is why I'm like this rabbit hole goes so deep because I know that there was a rule, attempted rule around credit reporting as well, and I think a firm has voluntarily participated. Way to go, Affirm. But I think that's also because Affirm offers pay in for and true financing. And I think it's probably because since they were already doing true financing, they were like, it's a hop, skip, and a jump over here. But I mean, the argument being made here is essentially credit cards are open, balanced, right? They're revolving credit, and pay in for is a finite allotment. But I think your average consumer, though, just does not understand that because usually you're like hooking your buy now pay later up to a credit card or you're hooking it up to a debit card, and so in your brain you think like, well, this is just like an extension of that financial instrument, but the core reality is that it is not that financial instrument. You are using a different financial instrument, so you actually don't have the protections that you think you have like when you're using your credit card. Like, and I know that like I've looked into the data of like a couple of different merchants here and there, and like, and from what we've heard is that buy now pay later disputes are very messy. It's like, do you go directly to the buy now pay later? Do you go through like if it's in an acquirer stack or there's an integration, like who manages it? I don't know. I think it's just getting really messy. And I think this rule probably would have put some clarity and onus on saying like you need to have robust dispute practices. You need to also, if a customer refunds certain things or cancels, you need to follow this set of rules like everyone else does. But if you're a buy now pay later company, you are probably pretty happy with where things are at these days. Well, Zelle, you guys, the app is shutting down. It's by this time has already shut down. RIP Zelle app. honestly didn't even know it had its own separate app.
I did because a few people have asked me if I had Zelle, and I never was a Zelle user, so I can't say I have any experience with it. I use Venmo still, but
I do too.
no Zelling. I mean, it's technically not gone. It's just not a separate app.
Correct. And I think this is what this is, they're basically what they're saying is like, sure, in the beginning when we were launching, this was maybe the easy way for people to do it. And, it made us kind of on the same lines as some of these other, fintechs with their P2P payments, peer to peer. But now like over 2,000 banks offer Zelle. It's incorporated into their, online banking or their the banking app. So it's just not needed. Also a CFP.
Yeah, it has a very
Zelle.
it has a very low usage rate now too, wasn't it?
I said it was like less than 2%.
2%. Yeah.
Yeah.
I think we'll just see this, like you said, this is the continued shift in this kind of behavior, where things will become more and more, I guess, seamless or embedded within other big apps, but within the larger service provider.
No, I don't know. Zelle still scares me. Again, like we can have so many conversations about just the recent enforcement of CFPB, but I'm pretty sure they just vacated or attempted to pull back enforcement on holding banks accountable for fraud over Zelle. And I don't know, like I feel like Zelle is risky for that exact same reason. And as somebody who almost had their bank account compromised, I saw just how fast a fraudster tries to issue a ton of massive Zelle payments out of your account. And I'll tell you what, it's mildly terrifying because you don't have access to your online banking, but fraudsters, not always that smart. So they, might not change the email address that all the alerts are going to. So you just see like request after request going out. Not great. But also I did see, and like I think it is a step in the right direction that Chase has introduced technology that, and I don't know how they're doing this, but basically if they think you're sending money to somebody who only has a like online social media presence, they block you from being able to send that person money. And they like pop up a little warning for you that's like, I think this person only exists.
This isn't a real person.
This might not be a real, well, it might be a real person, but it's definitely not who they say that they are, which I think is a good thing. And honestly, like it's 2025 and we're just now doing that. Like we probably should have done that a few years ago, but pretty wild, but also going to be really interesting when it is a real person and they're like, why do you think I'm not real? Have a whole existential online crisis. Am I real? Or do I only exist online? Am I in the metaverse?
And that's thanks to AI now, right? People, and sometimes you think AI is a real person the way it talks back to you.
Well,
Yeah, it can be.
AI cures for loneliness is definitely not in the scope of what we talk about, but there was some interesting announcement from Visa MasterCard that I think we'll be talking about very soon about their launching of AI. And as somebody who is often influenced by things, I'm not feeling very good about it. I forget what is the marketing statistic that's like it only takes like 5 solid exposures before you wear down like a person's like resistance to buying something. I'm in that. I'm in that demographic. If you show it to me enough times, I'm probably gonna buy it. Also, let me just say, like, I know times are hard. But I feel like one place you can always splurge is the grocery store. And if you slap a new item on that shelf, I'm like probably gonna buy it. I'm like, ooh, what's this? Oh, it's only $1.25. Ooh, splurge.
I'm very guilty of that. Just being very curious and probably don't even need it, but I am very curious of that just to say I got it.
Yeah, well, it's a grocery store. You're probably gonna eat it.
Possibly.
Yeah. It's not like buying something like a clothing item. Like you chances are you're gonna eat that thing. So our last story today, uh, and I think this is a broader sweeping motion, which is basically Europe saying, hey, how come all the big payment companies here are American or Chinese? We should probably have our own. That's like a rapid summation of the article, but essentially, Europe is, working on a capital markets union, which is basically trying to pull together capital markets across different member states, which, the challenge in that market is obviously you go from country to country, things change, and it can make borrowing across different countries, rather challenging. But, it is true that beyond like just local payment methods, there is no behemoth payment network that really comes out of Europe. I mean, Klarna is obviously a European company. I believe they're Swedish. But they're not like a network.
So essentially, they want to kind of be their own network and go independent. Basically, say, "Hey, we're here too. Don't forget about us. Let's do our own thing. Let's branch off and have our own rules and regulations."
This is a little funny because it's like, are we even, well, first, do we want independence? Independence from whom? Is there any alternative? Is there any option that my consumers would use? The answer is no. Have they tried to encourage these sort of local initiatives? Some may say yes, but I don't really think so. There is this European Payment Initiative, and Wero that we talked about a few is one of them, not even a network. Why there is no local? Well, maybe because they make out of this as apt. So it's like they're making their money on international transactions, and then on debit, credit, it's not there what they're making. So how do you want to create that is first to serve your needs, not to go out of the first stage at least? So it's an initiative that to me is when born. Nobody would invest on it. Instead, this article news, Europe must become, and it was, by the way, related to context and so on with the
Soccer.
yeah. But you should first, before you even solution to something that I don't know. What do you think, collective?
I mean, it does like a clear motivation behind wanting some level of independence. Basically, these massive are in your making money of your states, and I think kind of analog India, right? Like very this exact same. All of these tools of India coming later, like the establishments in Europe is they have opportunity to belong. Their population got access to. So to put a lot of government subsidizing having these regulations to be able to the MasterCards, the PayPal base from swooping in their market before their own publish. And I feel like that big challenge is like the cat, right? Like putting that cat in the back, right? That also just no money in it. I mean, I have to spend probably millions, if not a true, create police, man, and coordinate across governments, but then banks into issuing work banner. Obviously, the ability of education is, change as well. Nice thing to say, practice, the only even envision place would be like some sort of owned payment. So essentially doesn't exist to
Eventually, I agree.
tax to support it.
I would be European more for there to make them look rather than it. So
who would play her? Right? What would be the name of this?
Well, it could be SEPA, as simple as SEPA. They wouldn't want to. But then you need to build, Visa, MasterCard, they are good, but because they manage to go look for issuer with them and to make money with them. Yeah, SEPA is tiny to Visa, MasterCard. Give incentives and you open these things. They will need to market competition, as you said, but they're really with international.
The SEPA network to me, it's a nicer
Make a
Could
cool.
make a cool logo out of it. Yeah. Yeah. SEPA. I think you're exactly correct. All of those things have such goals that it's like things that it's not that you're going to. So is that just like all know that it's super duper difficult without there being their market change creates a like the only way that you do that is level of higher interchange.
It ends that. And the other challenge that you have not all local networks that, like in France, all of them to the local banks to create a network, as they did with this even Wiro. You will need local networks, an initiative where and first you need to make them involved, and then you build something. They did with Wiro. There is the success story in the Netherlands, including so ideal, interesting.
I mean, maybe a way that this could know how govern like very large like I'm buying
Yeah.
going to distribute grants because it exists in other countries and start to network essentially through acquisition up possible. Probably wouldn't be ever.
Indeed, no European banks. I don't know if it's the same in the US, but for you, it's not what they like the most. Prefer easy money.
So true. Well, for that, well, joining and if talk about subscribe us somewhere. Then if you do see us on circuit, the show, we'd love to have you. Bye.
Bye.